Opening narration/speaker notes. Today, we're diving deep into a story shaking the cannabis industry and U.S. financial markets alike. Former President Donald Trump has publicly endorsed CBD, a non-psychoactive cannabis compound, claiming it could revolutionize healthcare and save the United States $64 billion annually. The market reacted immediately, sending cannabis stocks and ETFs soaring. But beyond the headlines, this development may signal a structural shift in policy, investment, and public perception around cannabis. In this video, we'll break down the news, explore the market impact, analyze policy angles, and consider the long-term implications for investors and the industry alike. The story begins with a simple yet explosive public statement. Former President Donald Trump posted a video on social media in which he praised CBD, short for cannabidiol, highlighting its potential to save the U.S. healthcare system $64 billion per year. Trump framed CBD as particularly transformative for senior healthcare, suggesting that widespread use could reduce prescription drug dependency and offer safer alternatives for chronic pain, anxiety, and other common ailments affecting older Americans. While CBD has been legal at the federal level since the 2018 Farm Bill, it remains a politically sensitive and commercially underdeveloped segment of the cannabis market. Trump's endorsement immediately elevated CBD from a niche wellness product to a mainstream healthcare consideration, catching the attention of investors, policymakers, and the media alike. This public support also touches on a broader trend: the intersection of politics, healthcare, and alternative medicine. Trump's statements are not just a casual endorsement, they carry weight because of his influence over certain investor segments, policy discussions, and public sentiment. Markets tend to react sharply to signals of regulatory or political support, especially in sectors like cannabis that have historically been restricted by federal policy. Investors immediately started recalculating risk and reward. The perception that a high-profile political figure views CBD as a legitimate and potentially transformative product created a narrative of both market opportunity and policy tailwinds. The underlying message is clear. CBD is no longer just a wellness trend. It is being positioned as a mainstream healthcare solution with financial upside. In short, the big news isn't just the endorsement itself. It's the ripple effect it creates across policy, consumer adoption, and investor confidence. CBD is now in the spotlight, and the world is watching closely to see how this could reshape both healthcare and capital markets. The market reaction to Trump's endorsement was swift and dramatic. CBD YCBD US, a leading publicly traded CBD company, surged by 121% in a single trading session. Simultaneously, the advisor shares Pure US Cannabis ETF, which tracks a basket of cannabis companies, rose 20.6%, signaling a broader sector-wide bullish sentiment. Quarterly gains across the cannabis industry are now approaching 70%, marking one of the largest short-term surges in years. What drives these moves? First, political signals in emerging or federally sensitive markets often trigger outsized volatility. Investors see the potential for regulatory clarity, new product adoption, and policy-friendly legislation. Second, CBD-focused companies tend to operate in a high-margin, capital-efficient model. Unlike traditional cannabis cultivation or distribution, CBD production often involves less overhead, more scalability, and fewer compliance challenges, meaning that a regulatory tailwind can have a disproportionate impact on profitability. The surge in CBDMD stock illustrates how quickly investor sentiment can shift in response to public endorsements. It also reflects a broader narrative. For years, cannabis stocks have been in a roller coaster cycle, influenced by federal legislation, state legalization patterns, and public perception. When a high-profile figure like Trump enters the conversation, it effectively shifts the expected regulatory landscape in the minds of investors. Even ETFs like advisor shares, which provide diversified exposure to multiple cannabis companies, saw meaningful gains. This indicates that the market is not only reacting to a single company, but is pricing in a sector-wide opportunity. With federal and state regulatory clarity, investors are betting that this could be the beginning of a new bull phase for cannabis equities, particularly in the wellness and CBD segment. Beyond the immediate stock movements, Trump's endorsement has wider implications for the cannabis sector as a whole. The MSOS ETF, which represents the largest collection of cannabis equities, is now poised to jump 20%, reflecting renewed confidence in the long-term potential of cannabis as a mainstream investment class. This rare, policy-friendly boost is particularly meaningful because the cannabis sector has been struggling with regulatory uncertainty, over-leveraged businesses, and volatile consumer sentiment for years. Trump's public backing provides a symbolic green light for both investors and companies, potentially unlocking capital for expansion, marketing, and research and development. Moreover, the market impact is not limited to the United States. CBD and cannabis companies globally are watching these developments closely, anticipating that U.S. policy could influence international regulation, investment flows, and consumer adoption. Investors may perceive U.S. policy momentum as a signal for international markets, potentially leading to a broader global rally in cannabis-related equities. The sector's revival is particularly relevant for firms focusing on medical and wellness applications of CBD. Companies that have struggled to gain mainstream traction may now find themselves positioned for accelerated adoption, partnerships, and increased revenue visibility. This creates a virtuous cycle. Investor confidence fuels capital inflows, which enable growth and product development, which in turn strengthens the sector's credibility and market share. The policy angle is where Trump's endorsement could have the most lasting impact. Beyond boosting stocks, he hinted at reclassifying cannabis, which could fundamentally change federal enforcement and regulatory frameworks. This could reduce criminal penalties for cannabis use, ease banking and tax burdens, and allow greater participation of cannabis companies in public equity markets. Specifically, the IRS 280E tax provision, which prevents cannabis companies from deducting most business expenses due to federal prohibition, could be mitigated or repealed. This alone would dramatically improve profitability for legally operating cannabis companies. Furthermore, clearer federal guidance would allow companies to list on major U.S. stock exchanges, increasing liquidity, access to capital, and public investor confidence. Policy clarity also encourages innovation and product development. Companies could more aggressively invest in research, testing, and healthcare applications without fear of federal crackdowns. This could create new markets for functional wellness products, CBD-infused pharmaceuticals, and targeted therapies for seniors, veterans, and chronic illness patients. Overall, Trump's signal to the market is more than symbolic. It could catalyze regulatory reforms that make cannabis an investable, mainstream asset class. Investors and companies alike are watching closely, calculating how much of this endorsement could translate into tangible policy changes in the coming months and years. Looking at the bigger picture, Trump's endorsement of CBD is a potential structural inflection point for the cannabis industry. Capital markets are responding, with stocks and ETFs surging. But beyond financial metrics, this could signal a shift in investor confidence, public perception, and policy trajectory. If federal reclassification occurs, we could see a new era of market expansion, with previously constrained companies gaining access to mainstream financing, partnerships with healthcare providers, and broader consumer adoption. Public acceptance of CBD as a health supplement may rise sharply, accelerating the industry's growth curve. Investor sentiment is critical here. With renewed confidence, we could witness increased IPO activity, M&A transactions, and institutional investment in cannabis and CBD companies. Long-term, this could normalize cannabis equities as a stable, growth-oriented investment sector, similar to pharmaceuticals, nutraceuticals, or biotech. From a societal perspective, broader acceptance of CBD and potential cannabis reclassification could also reduce legal burdens on millions of Americans, reshape healthcare cost dynamics, and encourage innovation in therapeutic applications. Policy, investment, and societal trends may converge to make cannabis a mainstream, high-growth sector over the next decade. In conclusion, Trump's public backing of CBD is far more than a momentary headline. It has triggered immediate market reactions, opened the door for potential regulatory reform, and signaled a new structural growth phase for the cannabis industry. For investors, companies, and consumers, the implications are profound. We may be witnessing the start of a major transformation in how cannabis is perceived, regulated, and invested in the United States.